So it's not like this is a gradual rise here. We're going up the curve where everything does this. We can already start to feel that it's happening so fast. It's like, well, where's it going to be in another 2 years' time? And then another 2 years' time? It's beyond our comprehension. Well, it's the best performing asset in all human history. Since 2012, it's up 64 million% since I started looking at it. Now, I didn't unfortunately keep my original investment all the way through, but I know some people who did. I bought it and sold it, but have held on for a very long time. And all of my net worth is basically in this. In my liquid net worth is in crypto. So it goes up massively fast, on average about 145% a year.
Raoul Pal says we're entering an exponential age led by AI, robotics, and crypto, faster than most realize. As currencies lose value and wages lag, assets like Bitcoin and Ethereum have become tools for survival, not speculation. The economy is shifting as automation and AI boost productivity but concentrate wealth among early adopters. Those who understand and invest in this shift will benefit most. By 2030, AI and automation could redefine money, work, and ownership. Pal believes adapting early is key to staying ahead in a rapidly changing world.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Okay, let's go to 2030. So what happens at 2030? Well, we've already been talking about intelligence going exponential. So it starts to do weird things to the job market. We know that. Everyone's talking about that. But it actually does really weird things to the economic machine. So economy, the trend rate of growth of an economy, how the United States grows or whichever country, is basically this formula, which is population growth, more people means a bigger economy, how productive they are, what output do they do when they work, and then debt growth, which is a way of kind of covering up the cracks, where you just put debt and things grow, but that has to be paid back in the end, and we kind of hit that in 2008 in the financial crisis, and the whole economy is based on servicing the debts that we accumulated ever since then. After 2030, if you think about it, what I've described with the AI and the robots is infinite humans. That's what we're building here, is infinite humans that can come into the global economy. Okay, great. Economic growth picks up. But who gets paid for that growth? Who gets paid? Is it the robot companies? But it's not us. So then what do? Get a universal basic income? Maybe, but the government haven't got any money. So how are they going to pay that without debasing more currency? Okay, that's pretty fucked. So then you've got to think about, okay, if these kind of forces are at play, then what also happens when you put superintelligence into things like financial markets? Am I going to be a better investor than something with an IQ of 600? No. Can I operate faster? No. So what is a financial market at that point? How does the economic system work? The AI has a system of money. They're already trying to put AI and crypto together because an AI still needs to be paid for it as an AI agent. Like, agents are really like Fiverr, a website where you can choose somebody to do a specialized task. So an agent still needs to get paid like somebody on Fiverr does because they've got, rent and they need to eat food and live their lives. But the AI needs, go back to the same thing, compute and energy. So it's going to get paid. And some of them will generally operate at a profit, so they'll bear profit margin. But their agents are dealing with agents. They're subcontracting out work to each other. And so there'll be a system of money between them, which will likely via crypto rails is the only way of paying each other fast enough. So they're getting the economic pie. How does that work? If the agents are making the pie, people have been talking about the fact that single people can build billion-dollar businesses using AI. One person. So the whole economic system gets weird. It gets weird that it starts growing at an accelerated rate. The value doesn't accrue to us. Our savings have been debased, so they're basically worthless. And so the uncertainty becomes massive. My job as a macro investor, as a macro guy, I've, for my whole career of 30 years, have invested in big picture trends in economies and markets, looking for, looking into the future and saying, where's the world going to go? And creating the linkages and betting on that. And here we've got to the first place ever for me, where I get to some date like 2030, could be 2032, I don't know. Well, I've no idea. And so if I've no idea, and I'm considered an expert in doing this, and you listen to the AI people, they don't really know. Nobody really knows. The governments have no idea what's happening. I'm thinking, okay, well, if I'm right, we've got about 5 years to sort our shit out. And so that means if I'm trying to think, how do I get through this massive change? This is going to be the biggest change to human civilization in its history, because we were always the top of the tree, and now we're not. We're the next rung down. And then eventually there'll be artificial superintelligence, which will mean that the regular AI will be the next rung down, will be the third rung down. So if that's the case, the easiest way to get through it is to try and make as much money as possible now, so you're buffered from it. You know, if you can observe it from a beach in the Cayman Islands drinking a pina colada, it's better than being disrupted in everything that you do.
How do you your life for the next 5 years?
So I think almost everybody knowing this understands why I use that kind of mimetic language of how to your future, because everyone feels like their future's been when they looked at their parents, they were buying houses in their 20s. You know, if I go back to when I bought my first house or apartment, I was working in investment banking in London. I was like 25. I wasn't earning a massive salary, but I was in a high-paid industry. Okay, fine. But I bought an apartment. It was 3.5 times my income. The same apartment in London for the same investment banking employees, 25 years old, 10 times, 12 times. So even the deposit now is more than I paid for the house. I mean, that's how we are, and it's only getting worse. You see, as we keep debasing the currency by 8% a year, these assets naturally just go up 8% because, again, it's the optics of the denominator, the value of money falling, so it buys less. So that goes up, and then we got normal inflation. Just, go to the bloody supermarket or a restaurant in the United States. It's insanity how expensive it is now. But wages, well, they go up about 3% a year. Maybe if you're really lucky, 5% a year. But still, you kind of feel like you're on the hamster wheel and you just don't get anywhere. And that's what we've got to solve for people. Because if you don't break out of this, you're trapped. And it's a huge trap. And it's not going to change.
What do those steps look like?
There's weird times when something happens and people don't realize it at first, but it's a systemically gigantic thing. And this was cryptocurrency. So now people think, well, Bitcoin's at 100 grand, or 120 grand. What can I do? I can't afford it. No, that's not the point. You can buy 10 cents of it. It still goes up more than any asset. Well, it's the best performing asset in all human history. Since 2012, it's up 64 million% since I started looking at it. Now, I didn't, unfortunately, keep my original investment all the way through, but I know some people who did. I bought it and sold it, but have held on for a very long time. And all of my net worth is basically in this. In my liquid net worth is in crypto. So it goes up massively fast. On average, about 145% a year. We're all told to put our money in a 401k, and they put it in the S&P 500, and it goes up 12% a year. So if 8% of it is currency debasement and there's 3% inflation, you're actually not making money by investing in the S&P 500. But that's what you're told to do by the system.
Raoul highlights a new era driven by AI, robotics, and crypto, where technology is advancing faster than traditional systems can keep up. As inflation erodes currencies and automation reshapes industries, digital assets like Bitcoin and Ethereum are becoming key to financial survival and growth. By 2030, AI could transform how we work, earn, and invest. Powell believes adapting early is the only way to thrive in this new world. Do you think AI will create more opportunities or widen the wealth gap? And are digital assets the best way to protect your future?